US stocks record the worst day since 2020 after President Donald Trump outlined new tariffs, sparking recession fears. Stocks shed $3.1 trillion in market capitalization as the Dow nosedives nearly 1,700 points. The 10-year yield ends at their lowest level in more than 5 months. Another day of deep cuts across the Asia-Pacific for whichever markets are open today as Trump's tariff orders roil the markets. Japan's Nikkei falls over 2%. The gift nifty is also indicating a gap down for our own markets. Oil prices fall over 6%, logging the steepest fall in 3 years as OPEC unexpectedly speeds up oil output hikes post-Trump's tariffs. Gold prices trim losses as the wider market sell-off infects bullion traders. US President Donald Trump says the stock market plunge was expected and he termed the markets as a sick patient that need to be operated on. He also said that he is open to striking deals individually with countries. And Indian startups need a reality check, says Commerce Minister Piyush Goyal. Says Indian startups are focused on food delivery and hyper-fast logistics that turn unemployed youth into cheap labor, while Chinese startups are involved in semiconductors and robotics. Adds that having just 1,000 startups in the deep tech sector is a disturbing situation. Good morning, you're watching Power Breakfast this Friday on CNBC TV 18 in the Mumbai News Center. I'm Hormuz Patakia. Let's first take a look at how the Asian markets have started off this morning. Now, most of the Asian markets are shut today because of the festivities across China and Hong Kong. So the Chinese markets are shut. The Hong Kong markets are shut. The Shanghai Composite is shut as well. And the Taiwanese markets are also shut for today's trade. So which are the markets that are open? The markets in Japan are open and they are trading with losses of around 2.5%. The Kospi in South Korea too is trading with losses of around 0.5%. So underperformance coming from these two markets across the Asia Pacific that are open for trade today. And it's rubbed off on the gift nifty as well, particularly after the very sharp sell-off that we saw on Wall Street overnight. 123 points lower is what the implied open is currently indicating, a gap down. But even yesterday, there was a gap down. The gap down was bought into. We ended the session off the lows, and the bulls will be hoping that today is a replica of what happened yesterday. But the US markets had a very forgettable day, though. It was the Wall Street because the indices ended sharply lower there. They plummeted after Donald Trump's announcements on tariffs from all imports from almost every country. The Dow Jones created almost 1,700 points, marking its worst session since June of 2020. The S&P 500 moved back into correction territory. And the Nasdaq also dipped over 1,000 points or almost 6%. Now, the Russell 2000 was also down over 6%, entering bear market territory. And the Magnificent 7, or the Max 7, of course, the mega cap tech stocks, they cleaned out $1 trillion worth of market cap, with Apple leading the downside. So all four indices now are at least in correction territory or in bear market. CNBC's Mark Santoli takes a look at the damage done.
Pretty significant, and actually it was building up even before today. That's one of the issues. This is a 2-year chart of the S&P 500 with its 200-day average. You see we're spending kind of a lot of time under there. This was a brief little couple of weeks in the fall of 2023. It was a 10% correction. We kind of quickly, though, got back above that 200-day trend. So it's going to have to rebuild itself here. 5,500, it felt like it was a tentative floor. We tested it once. Now we're talking about 54 trying to hold. That's not only the September lows, as was mentioned earlier. We first got there June 12th of last year, and that was on a very benign inflation number when the Fed first put into rate cuts into its outlook. So that was a soft landing celebration. We need a new bull case here. Take a look at the dollar index. A lot of talk about how textbook says tariffs mean your currency goes up. In this case, dollar index is actually shuttling lower here. That's mostly because of expectations of potential economic weakness here and rates going much lower. 2-year Treasury yield led us down here. Now, we have been lower not that long ago in the 101 to 100 area, so watch those levels as well. Finally, credit. It did finally give way. Corporate credit was hanging in there. It was saying there was no real macro problem. This is the ratio of the high-yield ETF to the intermediate-term Treasury ETF, and you see kind of pretty far down, not quite back to where we were last summer or so, but still kind of a critical macro message we're getting here.
Staying with Wall Street, then, let us also listen into what the US president himself had to say about the stock market fall.
Well, I mean, it's to be expected. Where this is a patient that was very sick, We really inherited a terrible economy, as you know, with a lot of problems, including loss of manufacturing, plants closed up all over the country. You know, we've lost 90,000 plants since NAFTA, if you think of that. 90,000, it's not even believable. And about 6 billion jobs. And so it was a sick patient. It went through an operation on Liberation Day. And it's going to be a booming country, a very booming country. It's going to be amazing, actually. And we see it because we have trillions of dollars committed to come in, trillions.
And the president was also asked if he was open to talking with countries if they called him. Here's what he said.
Well, it depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. For instance, with TikTok as an example, we have a situation with TikTok where China will probably say, we'll approve a deal, but will you do something on the tariff? The tariffs give us great power to negotiate. Always have. I've used them very well in the first administration, as you saw, but now we're taking it to a whole new level because it's a worldwide situation.
And the US president was also asked about Elon Musk's mission and about how long would he stay as part of the Trump administration. Here's what he said.
Well, Elon is fantastic. And I think he's a patriot, and I think it's a shame what they're doing with his car company. Had a great car. It's a great car, great product. And it tells you what a patriot he is. He's amazing. No, I mean, as long as he'd like, I like smart people, and he's a smart person. I also like him personally. When he endorsed me, that's when I really got to know him. I know him a little bit before that, but not much. And then he endorsed me. And it was a very strong, embracing endorsement, as we all know. And I would say Elon will stay for a certain period, and that he's going to want to get back to his businesses full time. But there'll be a point in which time Elon's going to have to leave.
Now, U.S. Commerce Secretary Howard Lutnick commented about the trade tariffs that President Trump unveiled a day before and how it is meant to boost U.S. manufacturing and trade policies. Listen.
Well, I think the long term or even the medium term, you've got to expect the United States of American markets are going to do extremely, extremely well. I understand the reordering of the rest of the world's markets, but they have been taking advantage of the trading policy, the markets policy. All the policies of the United States of America were designed to make you rich and make us poor. You know, take our factories from us, go build elsewhere. I mean, imagine this. Why are all of our pharmaceutical products, the ingredients to our pharmaceutical products, made in Asia? That's not cheap labor. That's just a failed policy that lets the rest of the world gut America.
Let's now get to the final update from our global market wrap this morning. The European markets also fell sharply following US President Donald Trump's higher than expected trade tariff announcements. The DAX was down close to 3%. The CAC also, the French index, of course, down nearly 3.5%, and the British FTSE also shedding 1.5%. The regional stock 600 index also fell nearly 3% as big retail names with global supply chains suffered the most in yesterday's trading session. But that's all we have in the global market front. How will all of this overnight action impact our own markets? Our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the setup on the F&O side of things as well. Firstly, Vamakshi joins in to get all the market cues we need to watch out for today. Vamakshi, good morning. It was a fairly resilient session yesterday. The bulls will be hoping for a replica today.
Well, absolutely, Hormaz. You know, when we look at the trading session yesterday, the investors did take note of Trump administration's tariff rollout. The Nifty did see a dip of almost 82 points to 23,250 thereabouts. Apart from that, sensex also saw a fall of around 322 points. The advance decline ratio, though, was firmly in favor of the advances. The mid caps as well as the small cap index, both of them outperformed the benchmark indices, and they continue to do so over the last couple of trading sessions. Both of these indices closed marginally higher. As far as sectoral indices are concerned, it was pharma all the way. The pharma pack led the gains. Ipca Labs, Lupin, and some other stocks also gain anywhere between 4 to 6% due to exemption from tariffs. PSU banks, media stocks were some other stocks that were some other sectors that were actually contributing to the gains. But on the flip side, the IT stocks faced tremendous heat as growth concerns loomed. As far as the US markets are concerned, it was market mayhem out there. The Dow tumbled 1,600 points. Look at the fall on S&P as well as Nasdaq. They've dropped the most since 2020. The US Treasury yields, for that matter, also fell sharply to the lowest level that we've seen since October. The dollar index too saw a very sharp fall to a 6-month low of 101.5. As far as economic cues are concerned, not much lined up out here, but India's S&P services PMI data will be disclosed today. But apart from that, as far as the Nifty is concerned, the important levels to watch out for: immediate hurdle is placed on the upside at 23,400, support coming in at 23,100. And let's also look at what the GIFT Nifty is indicating. It is indicating a gap down start to the Indian market.
A gap down start, but this slight improvement as well. We were 125 lower at the start of the show. It's slightly 90 points lower now is what the implied open currently suggesting. Over to Upasna now, who has a long list of stocks that you need to keep an eye out for today. Upasna, good morning.
Good morning, Hormas. Well, certainly a long list on the back of Q4 updates. First up is HDFC Bank. The company saw quarter-end deposit growth moderated to 14% versus 16% reported in third quarter. AUM growth was tad higher, up 7.3% on a YoY basis and about 3% sequentially. Next up is Bajaj Finance. Overall, a good update. The new loans booked saw a growth of 36% and AUM also saw a growth of 26% in line with company's guidance of 25 to 27%. Now, growth in customer base saw an uptick of 22% and new loan booking at 36% on a YoY basis. Now, RBI Bank will also be in focus as total deposits saw a growth of 7% and CASA was up 4%. L&T Finance also gave its Q4 business update. The retail loan book saw an uptick of 19%, but the bank's retail disbursement remained flat with just about 1% growth on a YoY basis. Bandhan Bank also reported its Q4 numbers. The loans and advances saw an uptick of 10%, but total deposits stood as high as 12% on a YoY basis. Avenue Supermart also reported its Q4 numbers. The revenue growth remained steady at 17% at 14,464 crores. The net store addition stood at 28, which was the highest quarterly increase in the stores. Vedanta will also be in focus as company reported its Q4 numbers. The aluminium production saw an uptick of just about 1% on a YoY basis and downtick of 2% sequentially. Adani Wilmar also reported its Q4 update. The company achieves 7% of volume growth and revenue growth of 36%. Mazgaon Dock government says that it to sell up to 4.83 stake in the company via OFS and floor price is set at 2,525 per share. Ultratech Cement also in focus as company says it will acquire Wonder Wall Care for 235 crore. And lastly, Bajaj Mines will also be in focus as company commissions 6 megawatt solar power plant. So all these stocks will remain in focus today.
Upasna, thanks a lot for that list. And finally, Sudarshan joins in with cues from the FNO space. Sudarshan, good morning. A gap down, but hopefully the bulls will be looking that the dip gets bought into today as well.
Well, yesterday we had at least weekly expiry to save the day, but for today we'll have to see because as of now, cues from the global markets are looking very weak. If there was any hope for the recovery in the US market, well, the things only got worse, and at the end of the day, US market posted a very different picture, very dim picture, and the loss in single-day loss was the worst in the last 5 years, basically since the COVID 2020 that US market has seen. For today, GIFT Nifty is indicating a gap down start. It's down nearly 100 points. Talk about yesterday's session, I'll say it was a healthy day of trade for us, while sensex and Nifty have seen a close with minor cuts. Broader markets saw healthy gains. Both mid-cap index and Nifty Bank were higher at the close. Now talking about the institutional flows, FIs yesterday sold nearly 3,000 crore in the cash market. For DIs, buying figure was just rupees 220 crore. If you look at the derivative side, also in the index futures, FIs have sold nearly 2,000 crore. They have also reduced long positions by more than 1,700 contracts, and at the same time, they have added short positions by more than 9,000 contracts. Now their long exposure is at 30%, which is lowest in last few days. Now coming to the option side, on the call side, if you see 24,000 call has seen very healthy addition. Their addition was nearly 32 lakh shares, and next was 23,300 call, where the addition was more than 29 lakh shares. Now coming to the put side, 23,000 put has seen addition of more than 34 lakh shares, and 22,800 put has seen addition of more than 40 lakh shares. So it tells you that basically option writers have hedged their position. That's the reason 24,000 call was active. Lastly, support for Nifty is now at 22,980 and resistance is at 23,450. Stocks that will be in focus, keep an eye on IT stocks because of big fall in Nasdaq, and lastly on all the OMC, IOC, BPCL and SPCL because of the fall in the crude.
Oh, absolutely. 7% lower overnight were the crude oil prices, and all these oil sensitives will be in focus. Darshan, thanks a lot for that. We take a short break. Up next, we get you updates on the trade talks continuing between the US and India. Stay tuned. Welcome back. Now, the US has sent a trade negotiation team to India, the only country to receive one so far under Trump 2.0. The talks are focused on a bilateral trade agreement and investment opportunities across key sectors. Abhimanyu is here to get us more details on that. Abhimanyu.
Now, post-imposition of reciprocal tariffs by the United States, government sources have told CNBC TV 18 that while India is not happy with the tariffs, but no formal objection has also been made to the move. They also indicated that India already has an early mover advantage as it has already engaged in negotiations with the US for over 50 days for a bilateral trade agreement. Also, India is the only country where the US had sent a negotiation team for talks in the Trump 2.0 administration. Sources also cited several challenges in exports of shrimp, gems and jewelry, and also competition in the export of carpets compared to countries like Turkey. Opportunities have also been cited in several sectors like electronics due to tariffs on Vietnam and China, and for export of textiles due to the tariffs which have been announced for Bangladesh and Vietnam. Also, government sources added that reciprocal tariffs which have been imposed are based on trade deficits the US has with respective countries, and country-specific tariffs are largely aimed at generating revenue as well as creating negotiating leverage for trade ties and trade deals with several countries. Sectoral tariffs have been placed higher as per sources to benefit domestic industry in the United States, though the cost of production will increase in the United States, which is already not too competitive in terms of manufacturing in some sectors. It remains to be seen how the situation is going to pan out with respect to the impact of reciprocal tariffs on India as well as other countries.
Abhimanyu, thanks a lot for that. Now, the new reciprocal tariffs announced by President Donald Trump risks tipping the American economy into a recession and pulling the global economy down with it, says Mark Zandi, who is the chief economist at Moody's. Listening to what more he had to say about the reciprocal tariffs as well as its impact on the US economy.
Well, if the reciprocal tariffs are implemented in full, I would expect some retaliation from countries abroad. I don't think they're going to sit on their hands. So the combination of those two things will result in a recession, an economic recession. It's a tax on American consumers. The bulk of the tariff increases will fall on them. Businesses that import product will have to pay more, which will hurt their profitability and thus their investment in hiring. If I'm right about the economy and the impacts, I do think the president will ultimately react to that and hopefully will pull back and declare victory and move on. And if so, we can avoid an outright recession. But time is running out. He's going to need to pivot here pretty quickly. Otherwise, I think the U.S. economy is going to go into recession and take the entire global economy with it. I don't think any country in the world is going to get through this without some significant hit to economic growth. Some countries are going to navigate through better than others. India's got a lot of, it's a resilient economy. It's got a lot going for it. And I think, should be able to weather the storm reasonably well.
The odds of a recession rising in the US, and even JP Morgan has warned that the probability is now risen to 60%. We take a short break. Up next, we get you cues from the commodity space, an action-packed day there as well. Stay tuned. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. A sharp fall in oil prices.
Oh, well, absolutely, Hormuz, and the markets perhaps saw it coming because there were two incidents or two events yesterday which the crude oil prices were reacting to. So a 6% decline that we've seen in the markets yesterday comes in, one, on the back of fears of global trade war, weighing on back of high tariffs. I mean, this is something that impacted across. But the other thing which led the crude prices down is that the OPEC is now boosting output for the month of May by 4 barrels per day. The markets were anticipating 40,000. So 400 versus 140 is what really led to a very sharp decline coming in for the markets there. You are looking at higher supplies, not just coming in from OPEC and allies, but also from US in that sense. And Canada also has been sprucing its output on the higher side. So the markets are looking at higher supplies, higher tariffs leading to lower economic growth and weakening demand going forward, and that's very strongly weighed in sense of crude oil prices. But crude is not the only one. If you look at silver, well, that held 5.5% overnight. Platinum was down 4%. Copper fell another 2% overnight, trading at a 3-week close right now. Cotton and rubber, where China is a major market, both of these industrial commodities also fell 4% apiece. So, well, yes, and Asian markets are no different right now because we've seen that decline just about continue right now as well.
Multi-month lows for all of these commodities. Manisha, thanks a lot for that. Now, Commerce Minister Piyush Goyal has said that Indian startups need to introspect on the sectors they choose to focus on. Now, speaking at the Startup Mahakumbh 2025, Goyal said that startups are focused on food delivery and hyper-fast logistics, while Chinese startups are involved in semiconductors and robotics. He added that having just 1,000 startups in the deep tech sector is a disturbing situation.
We are focused on food delivery apps, turning unemployed youth into cheap labor so the rich can get their meals without moving out of their house. And against that, what does a Chinese startup do? Work on developing electric mobility, battery technologies, and with that, they're today dominating the electric mobility ecosystem. We are very proud of what India has done. But are we the best in the world as yet? Resources are going only towards hyper-fast logistics. And look at what the other side is doing. Robotics, automation, machine learning, preparing themselves for 3D manufacturing.
And we wrap the show with some somber news. Yesterday, actor Manoj Kumar passed away at Mumbai's Kokilaben Hospital earlier today. He was 87 years of age and was known for his roles in patriotic films and earned the title Bharat Kumar. Some of his hit films include Purab aur Paschim, Kranti and Roti Kapda aur Makan. The veteran actor received the Padma Shri in 1992 and, of course, the Dada Saheb Phalke Award in 2015.